Good day. Ira Epstein of Glynn & Associates with your metals market wrap-up, and this is for, actually I'm already into Wednesday, but it is Tuesday as I'm recording. The markets have opened already, so we're into the Wednesday trade, but this is for Tuesday, the 31st of March, 2020, and we're after 5 p.m. You can see all the markets are open, and look at the beating that gold already took tonight. Dropped down, it's already $8 higher, it was down $20. One of the things we were talking about, if you get my research, my subscriber video in the morning, was if the market took out the 1612 area, I was very concerned about it holding up. The other thing that I warned traders about was the volatility of an end of the month, end of the quarter day with the COVID-19 situation. The situation is getting more dire across America. Most people are now home. I think they're saying 3/4 of the workforce is home. So you've got to keep your eye on that. In Chicago, they just extended our stay at home until April 30th. So this just gives you an idea of what is going on. Now, when you get that, is that inflationary or deflationary? It's probably a bit deflationary, folks. So I'd keep my eyes on the metals. Why would they go up? The car manufacturers aren't able to get back to work. Nobody's declared an all clear, as you know. If anything, it's going from New York, and now we're seeing how it's starting to spread in many other parts of the country. The worst is yet to come. That doesn't mean that gold at some point or the other metals won't respond, but at the end of the day, even with the great number, and I think China's numbers were pretty good. Their companies are coming back, and I question if copper's getting back under $2. But that's not enough necessarily to just make these markets pick up and run. So let's take a look, if we could, at what gold looks like. This is a weekly chart of just closes. And as you can see, the market, while I had a down thrust because the line went like that, the market has had a bounce. It still has a pattern of lower highs and overall a lower low. So I'm still going to call it in a down thrust. If you take a look at the gold chart, I can't wait for this market to get away from this pattern where you had this monster break and then the rally back up. These are $200, $240 moves, so they're happening very fast, and you just broke down. Example, tonight you're down $13, but for the day you were down 46. 46. That's a big break any way you want to cut it, and this market, once it failed, and you'll see where, I got concerned, and this is where I was concerned. I didn't think this market had any business getting under 1612 if it was going to hold the patterns of these higher lows, and I got nervous when you got here, and I questioned where you're going to be able to follow through. You didn't. Why? Well, let's go to first the moving averages. As you began the correction, it's not uncommon for prices to make a run for what I call the line in the sand, the 18-day average of closes. That's pretty much what this market has done. In between right here, 1587 to 1555, are two good layers of support. You've got the 100-day average and the 18. So we've had a retracement of size. You've come from roughly the 1460 level back up to nearly 1700 and right back to 1576. If you think that's easy trading, God bless you. I don't think it's easy trading. When I take a look at where we're at in the marketplace, the Bollinger Bands, we didn't get up to them. We failed right here to get through these highs. That's what was bothering me. Here's a market, and if you look at bonds and notes, you see a similar pattern. It got up there and the market backed off instead. That doesn't mean it's going to fall apart, but it's a problem because you've made a run up here and you've developed pretty good resistance. Now you can talk about the 1700 level. Get over that, and I'm pretty convinced the bulls will come out of the woodwork and say, we're on our way to the 2000. Wouldn't surprise me at all. When we take a look at momentum, it turned down. And yesterday where we had the momentum is you had gotten overbought. This is how you finished today, but this is what it looked like on Monday. And you were overbought. You still had the higher lows, but you were starting to get questionable on the lower highs, and you couldn't afford that 1612 to be taken out. You finished up the day, as you can see today there. Now the question is, are you going to get any legs to the downside? And it could be the 1555 level up, as I said, 1587 and a half, fight zone. In the gold silver, silver gained on the gold because, as you can see, we've peaked out in this 125 area. We're pulling back to the 112 zone. When I come over and look at where the resistance is, it's ugly. It's right here at the 18-day average of closes. My guess is if you can get under 1394.50, the bears wrestle back control. And with the question then in my mind is, are they going to try to drive the market down here? Let's reverse it and give you the bull side. If the market doesn't take out 1394.50 and get back over 1450, the highs of today, well, I think the bulls will be powered. They'll feel that they've got something they can run with. In the copper market, this is a market that's worked off an oversold condition. It's still not in a bullish phase. This is a market that's got a lower low, higher high. I'm looking for resistance at that 18-day average of closes. If I look at the platinum, where's the battleground? It's just like silver. If you can get back over the highs over here, that could be friendly. But if you take out 710.90, I'd be cautious then, because you're going to have the potential of lower highs, lower and low. You've already corrected an oversold condition, and the bias would be down. That could give the bears back control of the market. In the palladium market, we've had this pattern of higher lows, higher highs. This palladium is a world all by itself. It's also a $50,000 margin. You heard me, one contract. So full-size contract is that much. We are in a resistance zone though, so keep your eye on that one. And the question is, if the market takes out 2096.40, like I said in some of the other markets, you're back into a resistance, could be a failure number up there. Last in the dollar index, the Fed today made another move. They opened the repo facility. Central bankers can come in, so they don't have to sell U.S. securities to get U.S. dollars. And that has been a real problem for the dollar. It's one of the things that was driving this market in one way, then came back down. But they've taken off the pressure. Now the central banks can come in and do repos, get dollars for short-term loans. That should take some of the pressure off the dollar. We'll see if this market pays attention. If the market takes out 98.34.5, you're back into a bear pattern, and I admit, the first support's right under that at 97.62. This is a battle zone we're going to watch right now. I want to remind you that one of the things we try to do is put out a lot of research and charts daily. So if you sign up for our chart of the day and other features that we have, if you look at our free offers, you'll see those. And then to go with it, our team writes a lot of newsletters all day long. For those of you that have never charted or played with our charting software is what I should have said, you might want to try that. Because through our QT charting software, we broadcast orally during the day. And if you miss one, it's not a problem. We have a media center. Just go in and play it. But we cover many, many of these markets. So how do you get access to this? Well, it's actually fairly simple. All you need to do is go to our website at www.iraepstein.com under the bottom right. Just not under it, but you'll see to the right, Ira's free research. If you want to find out about my morning subscriber video or my spider videos, you might want to go to the research section, or you can click up here. It'll take you right there. In any case, I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.